All right, traders. So the bulls remain in control for the micro trend. This is now day 2 of the bulls running the market up. Within this video, I'm going to give you the updated price action analysis on the SPY. If you watched yesterday's video, you were well aware I showed you in terms of how this can play out both ways. And what ended up happening for the micro right now is the bulls are still in control. As early in the morning, they had a breakout past 442 and then it ripped to 444, had a small pullback, and then they turned that key 442 resistance into support, which is a very bullish confirmation on the 5-minute chart. Keep in mind, when things are very, very volatile, focus on using the 5-minute candles rather than the 1-minute candles. That's something to keep in mind. But yeah, there was fairly a bullish confirmation at around 10:30 a.m., which I had pointed out within the chat, and things are still very, very bullish for the micro on the overall market. This is now day 2 now, and SPY is going to be on track to hit $455 this week. So I'm going to be breaking down to you what needs to happen for the bears to remain in control for the macro. We discussed this yesterday. What needs to happen for the bulls to remain in control of the micro, and also what needs to happen for the bulls to take control of the macro side of the move if that were to happen. So we're going to be breaking down both of the possibilities. I'm going to be preparing you for upcoming trading opportunities. Within that video yesterday, in terms of day trading opportunities, I felt that it was fairly easy to identify that the bulls were taking control for the micro, and there were some nice day trading call opportunities within from the video last night. But with that being said, we're also going to be discussing the macro because the macro has not been working out. And in terms of the macro put options, this has by far been my worst trade of 2022 and also 2021 by far. So we're going to be discussing some of the mistakes I made and plans moving forward, and some changes and things I'm planning to adapt moving forward towards the end of this video, going over the whole macro trade. So right now we're going to be discussing the micro price action. So that's more of the short-term move. So in terms of the SPY, what we were talking about in terms of yesterday's video, we were talking about how there's key major resistance. You have this key resistance level right here on the SPY at 442. This is your major resistance level with huge downside potential. It goes from 442 all the way to 420. It goes from 444 all the way to $426, right? So when it hits this key 442 to 444 resistance level, the SPY likes to pull back 10 to 15 points. Today was the day where it had that breakout. In terms of, was it, some sort of bullish predicament in terms of the chart, in terms of today's chart? Was it simply easy to recognize in that sense? Well, in the pre-market, it already hit $443, right? So it's already breaking out, already pushing that key 400 to that key 442 to 444 level. And then in terms of your bullish confirmations, in terms of when the bulls are really in control of the micro, this gap down today, and it did attempt to have a gap close reversal. It did attempt to really try to be red for a little bit. So in terms of the move that SPY had, it was fairly early. So we did get a gap down. It was a very small gap down. And then when it filled the gap, you could see it tried to turn it into resistance. It pulled back a little bit, but then right here, higher support came in. It had a breakout for the new high of day. It formed higher support, had a small little pullback, so it traded a little sideways for a bit. This is why you really want to focus on 5-minute candles as well when the market is extremely volatile. But the point being is, when you see the SPY turn that previous closing price into support and it starts breaking out in terms of confirmations of that happening right around here and right around here, and then the higher support right here is key. See how that higher support is above the blue line and it's above the previous high. Very, very bullish. Also, in terms of more bullish confirmations that the micro was going to continue to run, this is, if you look right here, this is big downside potential. 444. This went from 444 all the way to like $428 very, very quickly. So when you see the SPY break above that huge downside potential level, right? When you see it break above and it's turning it into support, it's turning it into support. And then once it starts to break above that resistance, that's when the SPY is really going to run, and that's when the bulls are going to take advantage of this whole micro push, of this whole micro side of the move. And then you might be wondering, well, okay, that's really bullish. How can you kind of measure how high the market can go, how high SPY can go? Well, looking at last time it had a very, very big pullback. It went from 444 all the way to 430 very quickly. That's a 14-point move. So that's one way to kind of measure how quickly this can run up. Another way is to look at the previous resistance. So in terms of the previous resistance, you could see like right here, you can visually see that 440 is your key resistance level. Now, if you're looking at the overall next big pullback resistance level, if it goes above that, it's right around here on the daily, which is like 448. And we had pointed that out as well. So that's how you can kind of identify that the bulls were really in control for the micro, and then take advantage of a day trading, of a scalping call opportunity in that sense when you see that. I did try a Netflix call option at one point. It was pulling back. I cut it very, very quickly for a small loss. I didn't like the price action. It was very, very choppy. I wanted to stay away from it. And then from there, I just sat on the sidelines. But with that being said, in terms of where we're at in terms of the market right now from a price action point of view, you have your key support in the 420s. It bottomed at the 420s. It started to form higher support in the 430s. SPY kept pushing multiple times to break above this 442 to 444 resistance level. Today's the day where it had the breakout. In terms of the key major support that cracked, that caused this massive downside move, that was at $449 and $455, those two key levels. So right now what the SPY is doing is it is going back to that previous support that cracked before it had this massive downside move. And that overall previous support, where that huge key support level is going to be right here. This is where the SPY is heading. It's heading to $456. That's just the reality of the situation. This bottom pin, this bullish move. Now, in order for the bulls to take control of the macro side of the move, meaning the overall side of the move, they have to break out and turn 456 into support. Until then, from a macro perspective, SPY can be in the situation where it hits this level and then it starts turning it into resistance and it comes falling back down in that sense, right? So just understand from a macro point of view right now, the bears are still in control for a sense, but it's not 100% confirmed at the time being. And one of the main reasons why is this is breaking out and very, very bullish for the micro. So it's going to try to retest this key macro point, this 456 to 455 key support level. Now, with that being said, if it turns that into a resistance level, that means the bears are in control for the macro perspective, and it should continue to climb back down to 440. If 440 cracks, then it goes to 430. Now, if the bulls turn this, 455 level into support, that is extremely bullish, and that means that's when they gain control of the macro perspective, because they're turning that key support level that was previous support that recently had a big downside move into actual support. That's very, very bullish, and then SPY will be on track from a macro point of view to hit at least $473. So with that being said, here's the biggest downside in terms of macro put options right now. We don't necessarily know how the SPY is going to react when it hits 455, 456. We should at least see some sort of short-term pullback, but in terms of like confirmations, it's kind of like hoping for a bearish confirmation. Plus, you're at this whole micro risk where it's getting squeezed. So the biggest mistakes in terms of this, swing trade that I've made with these whole SPY puts is, the first mistake was I got in at a very, very bad entry. I got in towards a key breakdown, right? So that was the first mistake. The second mistake was swing trading a put option into a bullish candlestick. So you guys know, and I told you guys this in the past, in terms of swing trading, I like to wait until the end of the day, ideally past 3:30 p.m., because I use the daily candlesticks as a confirmation for me to hold overnight. And the problem with swing trading on Friday was SPY was a very, very bullish candlestick, and I got such a poor entry and I didn't cut it. So it was just one of those situations where, I might as well just hold this one out, right? I might as well just see how it reacts on Monday. And in terms of if you want to cut your losses very, very quickly, you guys are well aware, if SPY breaks out above 442 to 444, this is ramping up to 450s to 455. So that's like your last area in terms of cutting a loss quickly, right? If you hold past that, then it's literally just bag holding in that sense. So the biggest mistake was getting a very poor entry at a key breakdown, swing trading into a bullish daily candle. So in terms of, put options, you don't want to swing trade at a key breakdown into a bullish candlestick, Same thing towards resistance. You don't want to swing trade puts into bullish candlesticks at key resistance. See how there's, a lot of resistance right around here, and this is a green bullish candle, and look what happens the next day. Gaps up. You don't want to do that. So I broke way too many rules, and it's costing me, substantially. Like, this was by far my worst trade of, 2021 to 2022. So with that being said, I'm going to be very, very cautious moving forward to make sure that I do not make this mistake again in that sense. So just understand, it really shouldn't have been a swing trade in the first place. It was such a poor entry, and it was a bullish daily candle in that sense. So those were the overall mistakes I made. And if you hold a loss long enough, you really just get to that point where you don't even care if you lose everything on the option contract, if you're already down like 60, 70%. So I typically cut my losses at 20%, 30% max on a contract. But this was just one of those situations where I just let it ride, and I really let my emotions get to me in that sense. So yeah, that's kind of where I'm at in terms of this trade. It's just going to be one of those, worst trades, and I'm going to try my best to not put myself in that situation. So in terms of, talking about adding to a put or buying a put option, you have to wait until there's a bearish confirmation. And at this point, you're really going to want to wait till at least $455, 450 to 450, like $455 and 456 would be like your best ideal level. And what are we waiting for in terms of a confirmation? Two things. First of all, you want to see a channel develop. See how SPY is just kind of sitting here, and then it starts to form some lower highs. It breaks down a little bit. It's forming the red candles. Those are the confirmations you want to look for. And you want to be doing that towards key resistance. You can also do it towards a key support level with huge downside potential. So example right here, 455. This is a key support level with huge downside potential. It quickly dropped to 420. So if you see the SPY forming daily candlesticks within a couple of days, forming a price channel, it's just sitting, it's just forming these red candles like this, something like this, right? Another indicator in that situation was this blue squeeze. This indicates a very, very bearish signal on the overall SPY, on the overall, stocks. So if you see it kind of just sitting, you got to wait for a price channel to develop. You got to wait for something to form. Another way to go about it is you can attempt to do it as soon as it forms a bearish candlestick. So for example, something like this. There's resistance right around here. SPY is a massive sell-off. It pushes up for a couple of days like it's doing now. Then it forms this red spinning top, this red bearish candle at key resistance. So you can try a put there, hold it overnight. You can also try a put into that red candle the next day. So that's what you wait for in terms of swing trading. So moving forward, in terms of swings, we have to wait past 3:30 p.m. That way we can use the confirmation, right? And not play like a game where we're, simply holding and getting a bad entry. Like, guys, for swing trading, we got to wait past 3:30 p.m. That was the main mistake, along with the terrible entry. So that's kind of where we're at in terms of adding to a potential put option. As of now, there's no reason to be adding into a put option or to be buying, more of a put option. Things are still extremely bullish for the micro, and SPY should be able to hit, $455 potentially this week. So in terms of, the current trend, the current pattern that we're seeing, SPY is due for a little more upside. There's no signs of stopping. These are just green bullish candlesticks. Like, it could be something like this where it just keeps on going up. Then once the channel forms and it's sitting and the red candles come in, then you swing trade the puts. Or it could be something like this where we just get a quick little run up and then a red candle comes in and it comes crashing down. So basically no swing trading on puts from here until we get these red candles coming in towards a key 455. That's kind of where we're at. Now, in terms of this whole squeeze indicator, this is not looking good, guys. It's just really not looking good. And this could really change the macro as well. Like, I'm telling you how it is right now. Things are just not looking good for the bears for the time being. So yesterday I had pointed out that this was yellow, which indicates that it's turning bullish. And then this is the second time it turned yellow, which is very, very bullish. Going back to 2020, where the market dropped about 30%. If you guys remember what I was talking about, we were talking about some potential move where, SPY drops 10% from all-time highs like it did in 2020. Then it bounces back up, and then it gets absolutely crushed. And you could see, like, once this started turning yellow for a couple of days, it bottomed out. And then from there, it kept on going higher and higher, and then eventually retested those all-time highs. So in terms of this whole squeeze indicator situation right now, the SPY is just very, very bullish, and it is what it is. So in terms of, moving forward and what I would focus now, so in terms of like what I'm doing, I'm mainly just kind of sitting on sidelines. One thing in terms of like stock prices right now and my views on investing, I think it's okay to start dip buying, to start dip buying the stocks that you guys like, that you want to invest for the long term. I wouldn't be going all in at these levels. I still think we can see some sort of, further crash where SPY hits 390. If not February, then sometime this year. I think that's definitely possible. But in terms of current stock prices and in terms of how the market is looking right now, and in terms of long-term investing, I think now would be a good time to start accumulating some of the dip. It is what it is. And I'm looking at stocks at their key oversold levels. There's just so many, like there's just like a firm, like most stocks right now are at their yearly lows. In terms of 2020, they dropped to 5-year lows. And if this isn't going to be a whole 2020 situation, which was truly one of a kind, then now would really be a time to consider accumulating some of the dip. So like say you wanted to put $1,000 into the dip. What I would do is I would put in like 400 to 500 in terms of like now, and then I would save the rest, save the other, 50 to 60% in case the market drops lower. That's how I would play this whole long-term investing game situation right now. Because there's that possibility where SPY doesn't go lower this year. It's definitely possible. But yeah, guys, we really got to see. But in terms of right now, in terms of focus, I would look for opportunities to continue to play the micro or hedge for the call options. What I'm mainly going to be doing is kind of sitting on the sidelines and just really trying to come back strong and recover from this, because I always do. And we'll come back strong. We just got to really wait for the best opportunities. We got to wait for an amazing setup to come along and trade at the best price. That's what we got to do. And we got to, we got to reset. We got to reset mentally. We can't just dive right back into the market when you make a big mistake like this. You really got to realize what you did wrong and make sure that you're not going to make that mistake again, and really be self-aware of that. So you guys know, if I make this mistake again, you can call me out on it, right? You have the education, you know what we should be doing. So in terms of swing trading, we wait until 3:30 p.m. right? If we're getting a put, it has to be a bearish candle on the daily towards a key support level with huge downside potential like the key breakdown, or even better towards key resistance level. Same thing with calls. If we're buying a call, the opposite, right? We have to get a bullish candlestick on the daily, and we don't know that till the end of the close. So before then, they're just in and out scalps. Get in, get out, quick, couple of minutes, quick 30 minutes, locking in the profits. So moving forward, I'm going to be focused on just laser focused on the whole scalps, and also laser focused on just the best swing trades. But guys, one thing I do want to really address is in terms of a macro trade, right? Let's say you're very, very bearish, and you think the market's going to crash in a couple months or in a month. So you're okay with, buying some puts or something like that. You still have to wait for the confirmation. You still have to wait for the ideal price, right? That's what you have to do. And in this situation, I didn't do it. And, I didn't cut my loss quick enough. So just always double check, always triple check, when you get in a trade, always make sure, is this best for the micro? Is this best for the macro, right? Always check yourself, right? Because in this situation, this was a terrible entry. Like the market dropped like 10% from all-time highs. Stocks were at very, very key oversold levels for the micro. So it was due for some sort of bounce. And I just think I really got way too caught up and a little bit on the emotional side in terms of buying the puts. And I just really made that blinded mistake of riding them out, which is something I rarely do. I usually don't get stuck holding a loss. I cut them very, very quickly. You guys know within the program, like I typically cut my losses very, very quickly on options within like 10 to 20% range. But this was just one of those trades where I just really, whatever it is, just really let it get to me. So guys, just really, you gotta be super self-aware in this market and really adaptable. So in terms of where I'm at right now, I'm mainly just kind of on the sidelines, and I'm just waiting for my next big move. That's what I'm waiting for. I'm just waiting for a trade so good where it can really help me out to recoup losses for the short term. Obviously, I'm not going to be doing like big sizes or anything like that, trying to make it back, trying to make it more back in trading the best setups at the best prices and getting a nice big percentage return, but also locking in the profits. So I'm kind of just waiting for things to play out, and I'm mainly just waiting for, SPY to hit 455. That's where I'm at. Rather than trying to chase a call. Obviously, you can hedge, but you got to hedge at a good price, right? You don't want to chase. But in terms of where I'm really at, I'm kind of just waiting for SPY at 455. In terms of long-term investing, I think it's smart to accumulate 40 to 50% of the dip right now, long-term, of what you want to put into the market, and then save the rest if it does go lower. Because if it does go lower, stocks are going to take a massive, massive hit, and there's always that possibility, and you're going to want to have cash aside to accumulate that dip. So in terms of some other stocks that I'm keeping an eye on, BBBY, we're due for a pullback. If this goes red tomorrow, I'm going to be interested in put options for BBBY. What I'm potentially seeing is something like this. See these massive two green candles? See these massive two green candles? What happens on the third day? The third day it goes red, shit hits the fan, and then the next day it goes lower. That's the pattern that I'm looking at on triple BY. So we got to see, I got to see how this reacts. So in terms of the reaction that I'm looking for tomorrow, let's take a quick look here. So in terms of BBBY, let's see. So this went from 1717 to 1622. I'm going to compare it to what happened here. Okay, so on this day it closed at, let's see, it closed at 1505. The next day it spiked to 1535. So morning spike. I'm looking for a morning spike on triple BY tomorrow. If it looks bearish, if we see some resistance come in, I'm going to play the puts. Nice day trade, make a quick 20 to 30%. That's the plan on that. In terms of the resistance level that I'm going to be looking for it to hit, $16.50. $16.50 is going to be that key level for the BBBY put options tomorrow if we see some resistance coming in. In terms of Lucid stock. So in terms of Lucid stock, let's see. This needs to hold 2870. 2870 is the key level. If it cracks 2870, it's going to drop. It's going to fill the gap below at 2715. If it bombs out at 2715, it's bullish. It ramps back up to $29. If it breaks above 2950 tomorrow, turns it into support, you're looking at a strong run to like $32. That's the thoughts. That's the key levels for Lucid stock. In terms of Netflix had the gap breakout. The gap breakout was at 409. Once you see 409 breakout and turn to support, the stock's going to ramp up and it's going to start to fill that gap above, which occurred right around here. I did play the calls on it. It was a small loss. Got in, got out. Didn't like the price action, way too choppy, and it took quite some time for this to really run up. But that would have definitely paid off. With that being said, it's still moving up. The key right now, 410 needs to hold, and 427 needs to break out. If 427 breaks out, you're looking at a run to 445 to 450. In terms of key breakdowns, 409 needs to crack for the gap to fill at 384. Now, in terms of, let's see, Macy's is likely to go a little bit higher with the green candle coming in. We got to see if we see some resistance coming in towards $26. It's probably going to be another good opportunity to add into a put. But right now, we really just got to wait and see on this one. So, Tesla stock. In terms of Tesla, you have a lot of resistance right here towards 950. If it breaks out, you're looking at a run to 990. If not, then it's going to start to go back down to fill the gap at 846, which is unlikely for the time being. Typically, when Tesla has these massive gap ups, it likes to continue to run for the most part. But once we get that first red day on Tesla, it's really going to start coming back down to fill this gap below at 846. So that would be the thoughts on that for a potential put, is wait for the first red day and then kind of swing that. Kind of like what I'm waiting for with other situations. In terms of Apple, this is key. For Apple to continue to run, this is the major key. Your key level is going to be 173. 173.10 is your key level. It's well above that. So Apple's really killing it right now. With that being said, if it continues to run, your next level is 177. But it's kind of just waiting to see how SPY reacts at 455 on my end. In terms of Robinhood is now on day 2. So what I want you to do is, because this is going to be a phenomenal setup, study how Robinhood reacts when it has a when it has a big move up, because this was a big move. It went from 994 to 1450. Study how it reacts when it has a big move up. If you look, it doesn't last that long. It typically only runs for about 2 to 3 days. You can see right here, it bottoms out, it runs for about 2 days. It bottoms out, it runs for 3 days. It bottoms out, it runs for a couple days, right? So typically 2 to 3 days is like the max run on this. We're now on day 2. So the plan is, when this kind of goes green to red, when you see a lot of these go green to red on the day or have their first red day, you're going to want to grab puts on like Robinhood, Macy's, BBBY. That's going to be the plan, especially Robinhood. So that's going to be on my key radar for potential put, just waiting on the red bearish confirmations. Let's see. So in terms of Shopify, without a doubt within some time is going to fill this gap for the micro. It's going to go to 1023. This is very, very bullish, and it's breaking above key levels. So once it goes to 1023, if it reacts as a resistance, it's very bearish, and it's going to start to want to fill that gap at 872. If it reacts as support, that's bullish, and it goes to 1100. So I got my price alert on that, but this is fairly bullish. It's going to fill that gap here soon. CVS is a potential put. The chart's a little bit weird, but I think for a macro, if you're willing to hold it for a couple months, like a macro put, I can definitely see this dropping lower. It looks like something like this, where we get this strong move up. And then it just has that red day. And overall, it sells off, pushes back up a little bit, and goes lower. That's where I think we're at on this whole CVS situation. I think we just had that massive move up. Now we got the red day. Some more downside, some spikes up, and then some more downside. So with this one, I'm thinking like a macro put. Give it about 2 to 3 months. Stay in the money. I think we'll head back to about at least $100 a share. $100 to about $98 a share on this within the next 2 to 3 months. That's my thoughts on that. The best price would be 109.27. If you see 109.27 react as a resistance level, that's going to be a nice gap close reversal. So yeah, that's kind of my thoughts on CVS. In terms of NIO, so the whole NIO situation right now, NIO's looking extremely bullish. You got this strong bullish wick that came in right here. It looks like we're going to at least fill the gap to $27. Now, if that key $27 gap level turns into resistance, that's very, very bearish. And then NIO's going to want to drop back to 2090 from an overall point of view. So just understand, you got key previous support with big upside potential sitting at $30, and you got this key gap fill level with also strong support sitting at $27. So for the bears to really be in control for the macro of this stock, and for them to show true strength, they need to turn 27.35 into resistance. So for the micro, this is very bullish. This is definitely heading to 27. Now, if 27 turns into resistance, the bears are still in control for the macro, and it's going to push to 2090. For the bulls to be in control of the macro, for them to take control of the macro, they need to turn 27.30 into support, and they'll be on track to run it back up to at least $34. In terms of SQQ, and guys, this is like the inverse. So like, it's just right now, guys, with this whole market situation, it's really favoring the bulls for the micro, and we still have to see, how it reacts. So just remember, guys, don't do what I did and make the mistake where you trap yourself into a move, because that's what happens. SPY had a 10% plus pullback from all-time highs. Stocks are sitting at yearly lows. So for the micro, they're due for some sort of bounce. And what I did was I picked up, I swing traded puts at a terrible entry when this was at like 432 on Friday. And I held into a bullish daily candle. So I'm trapping myself in that situation for the micro where, this just had a massive key breakdown from 455 and it went all the way down to 420. So if the bulls take control for the micro, this is going to run back up to 455 within some time, and then you're trapped. And not only that, it's like you don't have that confirmation of, is 455 going to react as a resistance? Are the bears going to step in for the macro, or is it going to be the bulls, right? You don't have that confirmation. You're just blindly holding into it, kind of helping. So what we really need to focus on is, just waiting for it to spike back up like I usually do and focusing on the resistance. And then we see the bearish confirmations at 455. Then we step in. So just very, very bad mistakes on my end. And just looking at the chart on SQQ right now, it just looks so bearish. Like it really does. This just looks very, very bearish, especially with the whole squeeze indicator. So, I mean, in terms of where we could be at on this whole situation, like this SQQ chart looks extremely bearish. You can consider a macro put on this, but give yourself plenty of time because this whole market right now is insane, guys, with the volatility. Give yourself plenty of time, but definitely consider a macro put as well on SQQ, and that could be a strong hedge too. But in terms of SQQ, guys, I'm looking at this whole squeeze indicator situation, and every time this has a massive move up, it recently just had a massive move up. It basically doubled when it goes blue. So right here's the first day it goes blue, and you look at the confirmation. This is very, very bearish. This is like a def candle resistance. That's what you want to be grabbing puts on. When you see that and this turns blue, extremely bearish. And if you just study the past of how this reacts, so let's just kind of go back in time and just see how it reacts when it has a massive increase of like 100%. And then that blue bar comes in on the whole squeeze indicator. So right here, it has a massive move up. You see massive move up. The blue bars come in, and you can see those blue bars are basically the top. And then within time, it just gets crushed for new all-time lows. I'll show you some more examples and just keep studying this pattern. Like whenever when they're highlight this, these big blue bars, massive move up, big blue bars, new all-time lows, right? And it just consistently does it. This was back in 2020, massive move up. The blue started coming in right around here, and then bam, it just gets crushed. So guys, right now, the way things are setting up, it's not looking good for puts from a micro and a macro point of view. It just really isn't. So I would definitely consider us with SQQ when we get a spike back to consider hedging on this. And that's just kind of where we're at on the market, guys. It's just very unfortunate how this played out. Typically once a year, SPY will have some sort of like 7 to 10% pullback. And this could be one of those situations where it had its 10% pullback. And then throughout the rest of the year, it just kind of trades sideways between 430 to like 470s. And then eventually gets a new all-time high. That's definitely the reality of what we could be looking at. So guys, this is it's just a terrible trade, man. And I really just gotta reset and focus, with a macro trade to get a perfect entry. That's what I gotta focus on. Because one thing I've noticed is with a macro trade, when you take a long-term trade, and this is key, like when you take a long-term trade, you tend to think of the long-term profits, but you can get a little bit blindsided on, is this entry phenomenal? And that's what you saw recently happen with a lot of investors who were, buying into stocks towards all-time highs when SPY was sitting at 460, 470. All these stocks were very, very high, and everyone was buying the breakouts. Everyone was buying the dips. And a lot of those people who did that are down 50 to 70% within the past month and a half. So you got to have a phenomenal entry and not just think about that macro, that long-term profit return. First, think about what is going to be the best entry for the macro, then consider that return, right? So I've noticed sometimes with longer term trades, I could be a little bit more focused on the profit potential rather than what is the best entry for the long term. So that's something that I'm definitely going to work on moving forward with these whole macro swings, because that was just such a big mistake, guys. That was the worst trade I've made within the past 2 years easily since 2021. So I'm just going to try my best to not make that mistake again. But guys, we're going to come back strong. We're going to kill it. So like I said, moving forward, I just really want to take it easy, wait for things to develop more, and just really focus on the best setups at the best prices. Just get back to trading the high quality setups. You guys know me. I've been crushing it with SPY from an overall point of view. I typically get the puts towards resistance, towards the all-time highs. This was one of those situations where this was just a terrible mistake. So with that being said, I'm going to try my best to do what's best for the portfolio moving forward, and I'm really going to be cautious and adapt and be a lot more careful moving forward. But guys, I will see you tomorrow live at Market Open within Trader Society. Thank you so much for investing your time into your education, and I hope this video helped in terms of price action and perspective on what we can be looking at moving forward, right? So we got to come back strong. It's, about learning from the setback and then getting it all back and more. And that's where we're at right now. So I'll see you guys within the next video, and I'll see you tomorrow live at Market Open.